On H4 time frame of SP500, our key chart pattern was head and shoulder chart pattern. I shared this chart pattern on TradingView on 14 September. Now it has break out this neckline. So this was the key trend line which was working as a support for SP500 on H4, but now it is broken. And if you compare entire trend from top to bottom, wave by wave, then it made top on 4th January before rate hike cycle was started. So they are advanced investor, they knew that this year there will be global rate hike, which is bad for stock, especially for American, because they are global company. And now it has made lower low, lower high, and after Jackson Hole and CPI, it is ready to make a new low. First it made 50% retracement, more than 50 but less than 61%, and almost retested this trend line on third attempts. Since price is below more than 61% retracement from downside for this leg, so retracement is not anymore important. So last hope for you can be this 78% retracement level. So if you have missed all of this sale entry, then next sale entry can be retest of this trend line. So upside correction can give you a sale entry as a retest of trend line, but first downside support is this low which was made in June, and this was the fake bull rally because it was bear market rally and everyone was expecting market pivot early. So if new low comes and this support 3639 also breaks, then what will be the next target? First of all, we draft a retracement for this complete coronavirus bullish trend from bottom in March to this top. So this is Fed QE monetary policy which sent golds up and stock up, especially Bitcoin, because Bitcoin is a new hedge against currency debasement. So everything was going up, but new monetary policy which is opposite to last time, which we called QT, has been started and stocks are coming down. So rate hike is bad for these stocks, and our 50% retracement is 3505. So new low if that come, then our first target will be 50% retracement, then this high which was made before coronavirus, and this is our strong horizontal support. So there is a possibility if market comes down, then investor will buy on these two level, 50% retracement and this previous all time high. And even this level also breaks and it goes more downside, because there is no limit for human greed and fear. The next target will be 61% retracement, but this entire area from 50 to 61% retracement is your next Y zone. And we have these three horizontal level where investor will look for buying and seller will exit. It is not the time to buy. For buying entry, you will have to wait until Fed start cutting interest rate and QE monetary policy start again. And if we go to NASDAQ, then first of all it is making this falling wedge pattern, or based on elliptic wave you can say it leading diagonal chart pattern. And this can be your wave W, and this was the wave X correction, and right now we are in wave Y, so new low is coming. So if it breaks to downside, then same like SP500, our first target will be fib retracement level, because 50% is already tested, and next target will be 61% retracement at 10,589. Below that we have this previous all-time high as a strong horizontal support. So on NASDAQ we have this area as a support zone, the 61% retracement from bottom to top of this coronavirus trend, and these two horizontal level. And if it show a rejection, make hammer on lower time frame, then you can buy on that level, because this will be first key resistance zone for seller before it goes below this coronavirus bottom. But this is not market bubble that everything will crash itself. This is Fed monetary policy which is sending market down. And for the bulls you have to wait until price goes back above 14,000 level, then on breakout or retracement you can buy. Since this is a stagflation, it is hard to tell then new all-time high will come, but until stagflation is over, this stock will only meet sideways correction. This is the ugly truth that nobody want to hear, but last week many people are giving warning for stagflation, so more and more people are joining this trend. And same with Dow Jones, it made a fake breakout or upper trend line, but it made perfectly 61% retracement, and now it is back to downside. Since it has retraced more than 61% retracement, so bearish sentiment has been increased, and it is already confirmed by fundamentals like Jackson Hole meeting and CPI last week. So Dow Jones have this trend line chart pattern. It is testing upper trend line, it is testing lower trend line. So if new low comes, first of all lower trend line will be our first major support. It is dynamic, but visually they are support. If goes up, then again upper trend line will be resistance, but until price break outside this trend line it is bearish. So when you draw fib retracement from bottom before Fed QE monetary policy to this top, market has made 38% retracement, and it has tested this previous all-time high which is our strong horizontal support. So if it came down, then first target will be this horizontal level, because it was all-time high before coronavirus market crash, and during bear market rally this was also a bottom. So this is a strong horizontal resistance for seller. So if this level breaks, then we will sell retest and will target first this lower trend line and 50 and 61% retracement level, or after a downside correction, since these are corrective wave not impulsive, if it goes up again and break this horizontal resistance, then we will buy, retest and target this high. But this lower trend line and this 50 and 61% retracement level are target both for seller and buyer. Here on this buy zone below this horizontal level, seller will exit and buyer will enter. So buying retest of this support, so it can break this time. So buyer better wait for retest of this level. So these were technical, and all of the fundamental I have already discussed in gold video yesterday. Watch it, because Ray Dalio has given warning for rate hike. When it was going up, everyone was happy. Elon Musk become richest person of the world and retail traders were making money, because any fool can make money in bull market. All you have to do just buy. But new trend has been started, and it is bearish trend, and it is driven by Fed QT monetary policy. When it made a low in mid June, it was not a problem for billionaire, but since they knew that rate can go higher than 2.5, which were before coronavirus, so they started crying and they feel fear. So if new low come this time, the billionaire will start hurting, they will feel loss. So this low and upcoming quarter, October, November and December, there is a good chance that Fed pivot. So they cannot raise interest rate forever, and by the December NAP CPI, everything will give a clear signal, especially ISM data. So this is market crash and it is coming, and we are in the middle. So wait for start of new quarter, and when Fed gives signal for rate pause, then give signal for rate cut. But first will be rate pause, then market will start making bottom. So Ray Dalio is giving warning for 20% market crash if they hike more, and you just wait for this support and retracement level and follow the correlation between all of these three. When these three together give you feeling that they are making bottom, then you can buy, because all of them will not give you clear signal, but at least one of them will give you clear signal that market is making a rejection on this support and bottom is coming. On NASDAQ, until price goes back above this high, you cannot say it is bullish, or since it has retraced more than 61% retracement and fundamentally it is confirmed, big billionaires are giving warning. So there is a more risk for downside, and you just wait for support zone. And if you have already a sale entry, protect that until new low comes, or when it will make a sideways correction before final drop, then we will rejoin as a seller. But for that we need a sideways correction. So after this week, after FOMC press conference, we will get signal what will happen in next 3 months and how high the Fed interest rate will go.